Kim is thinking of organizing a fundraiser to support a local charity. Okay, and has planned to rent a banquet
Your
and
screen
provide.
is not visible.
Just a second. Shade. Can you see the screen now?
Yes. Yes, sir.
Is
Yes.
it visible?
Yes, sir, visible.
Yeah. So Kim is thinking of organizing a fundraiser to support a local charity. Okay. And how she is raising the local charity, he or she has planned to rent a banquet hall and provide the guests with food and entertainment and various party favors. She has decided to charge $500 a person. See, in like in foreign countries and some in United States, the presidents and all, what they do for election campaigning, they raise funds, and
Oh, yeah.
so they have these kind of dinners they arrange, and people they contribute money and all. Okay, so she has decided to charge $500 per person for this event, right? After
Yes.
researching around town, Kim has discovered the following costs. So this is the fixed cost, this is the variable costs, okay? This is the
Okay.
revenue. Am I right?
Yes.
So now what is the thing? Uh, Rental, banquet, and all everything is given. Variable cost per this unit is given. They're asking you contribution margin. It's like sales minus variable cost. What is
Variable cost.
sales? What is
Revenue
variable
520.
cost?
480.
Was this a question? I really doubt why such questions they are giving. Shall we move forward?
Yes.
Ninth question, please solve this. They're asking BEP is nothing but fixed cost by contribution, right?
Yes. Yes.
So, this is S minus V, selling
B.
price per unit minus variable cost per unit. And fixed cost would be the total value, always that is the case. All right.
Yeah.
So now you should be seeing what to do, how to do. So first of all, we know contribution is sales minus variable
Yeah.
cost. So sales is 10, variable cost is no unit contribution margin they have already given.
Contribution margin directly they have. Yes.
Yeah, 6. What is the fixed cost?
1.5
So they
million.
are making, yeah, they are making some fixed marketing cost is given, fixed manufacturing cost rate per unit is $2 on a denominator capacity. Okay, 1 million units they are making, right?
Okay.
So now how will you decide what you should be taking? See, if you produce 900,000 units, okay, okay,
Hmm.
or you produce how many units even? The fixed cost is same or it is going to vary.
Same.
Okay, so
Yes.
fixed cost 1 million in units into $2, right?
Okay.
Break even point in units sold. So they have this much, they are producing 900, but they'll be selling how much?
1 million.
Yeah, so this 2 million plus 1.5 million, it makes it 3.5 million.
3.5. Yes.
Just tell me what's the answer. So they'll make 900,000, but they have to sell like they
1 million.
have to sell 1 million. Yeah.
Okay. 5,83,333.3.
Yeah. So
B.
583,000. Yeah. 333. This is the answer. Okay. Shall we move forward?
Okay. Yes.
Next question. They're asking number of units of new product that Delphi company must sell during the next fiscal year in order to break even. So they are asking break even point
Okay.
in units. Will you try this?
Yes.
Yeah. So what is the formula? Fixed cost by
Contribution.
contribution. Contribution, how will you find out? Sales
Sales
minus
minus
variable cost.
variable
But if
cost.
they have given you contribution, you can search. Otherwise, it is sales 36
Yes,
minus
36.
variable cost 16, 20. That's the contribution, right?
Yes.
And what is that?
Fixed
The fixed
cost.
cost for 450. Nothing more they have given about it. So what's the answer?
22,500.
This is the answer. Okay.
Okay.
Note it down. We'll move forward.
Yes.
Have you finished the given PDFs all?
Yes, sir. I want investment decision answers, test
I've, gi-
answers.
I've given. Didn't I give?
No, sir. Only those types of securities test and answers you have
Okay.
shared.
Investment decisions I'll give. No problem. Do you find differences in questions in Hawk and this?
No, sir. Many are same type of questions. Few is
Uh-huh.
different.
Okay. Few are standard in Hawk or how?
Same question they are giving, like
Okay.
not even changing the units also numbers.
These are all old paper questions maybe.
Okay. Yes, sir. Done.
Okay. Next question. Gleason Company has two products, a frozen dessert and a ready to bake breakfast rolls. Okay. Ready for introduction. However, plant capacity is limited and only one product can be introduced at present. Therefore, Gleason has conducted a market study at a cost of
20.
$26,000 to determine which product will be more profitable. Results of the study show. So they have given all this. Sales of desserts at $1.80 per unit. Sales of dessert of rolls. So one is they are making dessert, one is they are making rolls.
Roads.
Desserts they'll be selling at this, rolls they'll be selling at this per unit. The volume they have given different volumes. Okay, this is the cost they have spent, and they will see which product is more profitable. Costs associated with two products have been estimated by Gleason Company Cost Accounting Department as follows.
Okay.
That means this is the volume they are going to make, and this is the chances of they making this volume. Okay,
Mm,
of
okay.
desserts. This is the volume they are going to make of rolls, and this is the chances of making those that at that volume. And these are the expenses they have incurred. Gleason treats production tooling as a current operating expense rather than capitalizing it as a fixed asset. Okay, that's okay. Operating expenses they want to consider production tooling it seems. So that is kind of a fixed cost. Okay.
Okay.
So because you can see that is given in total amount. In order to recover the cost of production, tooling and advertising for the breakfast rolls, Gleason's sale of breakfast rolls would have to be what? So in order to recover cost of production, tooling and advertisement, that means they are saying that they want to recover all the costs. So they are asking for
The
break
roads.
even point, right?
Oh, yes.
What's
Only
the
for
formula?
rolls.
Sorry,
Only for rolls we have to
only for
find out.
rolls. Yeah. Yeah. So if you
Fixed
want to
my.
recover your entire cost,
Mm,
that means you want to break even. So they are only asking from the perspective of rolls.
okay.
What's the formula? Fixed cost
Fixed
by
cost by
contribution.
contribution. Sales
Sales
minus
minus cost. What is your fixed cost here?
25,000.
Yeah, for rolls it is 25,000. 45,000. Sorry. What is the contribution? Sales minus variable cost. Is your sales value here 1.20 minus. It is the variable cost 0.50, 0.25, 0.30, 0.20, right? All these are variable costs.
Yes.
0.25, 0.30, 0.20. So it will be 0.55, 0.75.
1.45.
Yeah, 0.75. Can you tell me what's the this thing? I think 0.45, right? Hello.
0.75.
Yeah, sales
Okay.
minus
Yes.
yeah,
Yes.
sales minus variable cost.
45,000.
Yeah, 0.45,000 divided by 0.45 we
1
have to.
lakh.
Yeah, it's going to be 100,000 units they will
Yes.
sell to break even. Okay, shall we move
Okay.
forward?
I'll note it down. So just a
Yeah.
done.
Just a second. Just a second.
Oh,
Samrin, just a second. Huh?
Okay.
Hello. Hello.
Hello. Yes, sir.
Yes, sir. So this question is done or is still left over?
Yes, sir. Done. Done.
Okay, we have got the answer right. Now, next
Yeah.
one. Madengrad company manufactures a single electronic product called precision mix. I think we have also seen this question, right? This
Yeah.
unit is
Question.
yeah, batch. So is it a repeated question?
What was the
Let's see what
question?
they're asking. They're asking contribution margin. Okay, let's see, no problem. Let's see what's the question. Madengrad company manufactures a single electronic product called Precision Mix. This unit is a batch density monitoring device attached to large industrial mixing machines used in flour, rubber, petroleum, and chemical manufacturing. They have given the selling price of Precision Mix, that is 900. Variable cost they have given.
600.
Yeah, this is the total variable cost. I think they were like which costing we discussed that day, right? Income tax rate, fixed cost, except for an operating loss incurred in the year of incorporation, the firm has been profitable for last 5 years. Assume
Yeah,
a
we
10.
did.
Yeah, we already did this, right? Check it, please. It was what was the answer when we did this?
Just first answer we got. Oh, not 7 units.
So
In
this is
units
different.
we got.
This is in percentage then.
Hmm.
Assume a 10% increase in annual fixed cost, a 20% unit increase for direct labor and reduction in unit material cost of 25%. So just a second. Okay. Assume a 10% increase in annual fixed cost. So you have to increase your annual fixed cost by 10%, right?
Yes.
Hmm. And so your annual fixed cost is this, and 20% increase for direct labor. So let us increase the direct labor by 20%. What's the direct labor? 180.
180.
So it will be how much into 1.20?
216.
Yeah. So how much is the increment in the price?
20%. Uh,
Because they are asking, assume like after incorporating these changes, make contribution would be. So we have to see
Thir-
before and after, right?
okay. 36 rupees.
Yeah. So we will do all these changes. Okay. Oh, no, no
Okay.
problem. This is the new direct
Yeah.
labor. And what is that other thing which has increased? What is the formula for contribution margin? Contribution by
Sales
sales
minus
into 100.
100.
So
Okay.
the sales is 900, right? So
Yes.
contribution is sales minus variable cost.
Variable cost. 900
So
minus
900 minus, we will see 900 minus 216. And what other things are? And
25%.
20% fixed cost we do, it's of no use to us.
Yeah.
And reduction in unit metal cost of 25% with no change in selling price. So variable cost is how much? Unit 525, right?
Yeah. Yes.
So total variable cost is 600. So let's now decrease this. It's decreasing or what?
Reduced.
Reduce, right? What
Yes.
they are reducing? Material cost,
Material cost.
25%. Yeah. So 240. So 25% decrease, right?
Yeah. Yes.
How much is that? 0.7552?
180.
180. Then factory overhead and then marketing cost. Can you tell me what is that? All subtract. After changes.
Just a second.
Difference. This is
How much?
sales and this is variable cost. Contribution will get.
324.
So contribution is 324. Sales is 900 into 100. Can you tell me the margin?
36%.
36%. Okay.
Oh,
You want to note it down?
yeah, yes. Yes. Done, sir.
Yeah, just a second. Okay. Let's go for the next question. Next one, Samrin.
Oh,
So Harper and her band want to put on a concert. They have looked at two venues, a small one and a large one, and have compiled the following information. Small venue, large venue, capacity of venue is given 400 people, 200 people, fixed cost is also given. The variable cost per customer for both venues is $2. The band will charge $10 per customer for the small venue or $14 for large venue. What is the break-even point for small venue? What's the formula for break-even point? Fixed cost
fixed
by
cost minus
contribution.
by, yes.
Okay. So they are asking to find out the break-even point in units, I think, because they did not give dollars or anything.
Yes.
So now how many people, how many tickets they have to sell to break even? I think that is the concept here.
Yes, sir. Yes.
Hmm? So fixed cost, what is the fixed cost for small venue? 2000.
2000.
What is the contribution? These questions are very silly questions. I don't know what is this? Investment decisions were good. Okay. So now tell me.
250.
Sorry, 250.
250. Yes.
Okay. Shall we move forward?
Yes.
Next question. So contribution margin formula is contribution by sales into 100.
200.
Contribution is, yeah, sales minus variable cost by sales into 100. I've given the formula hint. You have to do this question. So your sales will be 1. Your contribution would be 0.60. Do you agree?
Yes, sir. 60% of sales. Okay.
Yeah. So divided by 1 into 100. So what would be your contribution margin? 40%.
Yes, 40%.
That you will be applying on sales to find out the amount, right?
Okay.
How will you find out the sales amount?
By substituting in formula contribution and 100 we have.
Yeah, if 40% is how much?
Contribution.
Yeah, so we have just got this. So break even point is, yeah, break even point is given us 780. So actual sales minus break even sales is equal to margin of safety, right?
Yes, sir. Budgeted sales minus break-even.
Margin
Yes.
of safety. Budgeted, what's the formula?
Budgeted sales minus break-even sales.
Sorry. I'm putting something very strange here. So budgeted sales minus break even sales.
Equals
What is the budgeted sales? Break even sales is how much? 780.
7,80,000.
So budget sales is equal to 1/3. So I'll take this here and it will be added.
Adding. Yes.
Yeah. So budgeted sales is 130 plus 780, right?
Yes.
What is the answer?
9,10,000.
Yeah. So this is the sales, and on that, if you apply 40%, you'll get the answer.
3,64,000.
Yeah, this is the answer, right? You
Yes.
want to note it down?
Yes.
Okay. Next question you are going to do.
Okay. Yes, sir. Done.
Please work out this one. Break-even point of large venue. So same formula, sales minus, fixed cost by contribution, right?
Yes.
Large venue fixed cost is,
5,000.
yeah, I put it. You have to just calculate and tell me.
625.
625.
5,000 divided by 8.
Just a second. Contribution. Okay. What is the, sorry, 10 per customer for, okay, large venue is 14. Extremely sorry. Ah, so 5,000 by 12. Now,
416.66.
okay.
Oh,
Shall we move forward?
yes. Break even.
Yeah. What is the next question? Break even. Break even units. Please read the question. Will you try this?
Yes, sir, I will.
Yeah, I'm not going to help.
Oh,
In the sense, you can tell me the steps, I'll write the steps.
okay.
Yeah,
I'll read the question.
yeah. Read the question, tell me the steps.
Fixed cost is
Sorry.
8,80,000 divided by contribution 20. 8 lakh. Sales minus variable 60 minus 40. 20.
How much? Answer.
44 lakh or 44,000.
Yeah, this is your break-even point in units. Okay.
Okay.
Next one. I hope 20 questions are like.
Yes, I enough. I'll try other
Yeah,
small
because
questions only are there.
I think they are almost not that troublesome questions, right?
Yeah, only just substituting
How many
form.
are there in this almost?
Mm-hmm. 87,
Okay, I think
83, 83 questions.
83.
Yes.
Let's check then how it's going. If we will see till 30, if it's almost the same thing, we'll move to the next section. Okay.
Okay.
Yeah, next one. Company sells its single product for $30 per unit. The contribution margin ratio is given 45%. So contribution margin ratio, selling price,
Fixed cost.
company sells its single product for $30. Contribution margin ratio 45%. Fixed cost $10,000. Sales were 3,000 units in April and 4,000 units in May. How much greater is the May income than April income? They're asking contribution. We have to see the previous contribution. We have to see the new contribution,
No.
right?
Yes. Yes.
So contribution margin we will apply on the selling price.
Okay. 30 into 3,000.
Yeah, so 30 into 45%. How much?
13.5.
And this is the 45%, right? Contribution margin.
Yes. Yes.
Sales units were this much and this much. So increment in sales units is 1,000. So
1,000.
how much greater will be the income into contribution margin? Because
Hmm.
operating income is this, right?
Yes.
Yeah. When
So
there is no
difference
tax,
will.
this is the income.
Okay.
How much? Difference in units
13,000. Okay. Yes. Yes.
will give the incremental income.
Yeah. 13,500.
Answer. Shall we move forward?
Yes.
Next question. You have to
Contribute.
do. Tell me the steps. What's the formula for contribution margin per unit?
Contribution by sales into 100.
Yeah. So what is the break-even points? This is now in units, fixed cost, variable cost. Then how will you find out? So what we can do is we have been given the break-even point.
Yes.
Break-even point is fixed cost by contribution,
Contribution.
right?
Yes.
Okay, so this kind of things you need to remember. Break-even point is 44,000. Fixed
54,000.
cost is 880. So you can divide it. What's the answer?
20.
Done. Okay,
Okay.
will you note it
Just
down
a minute.
or I shall move forward?
Just a minute. I need to do.
Yeah.
Done.
Next one. Company currently has a 4-stage manufacturing process in the following order. Okay.
Okay.
And the 4-stage manufacturing process are processing, smoothing, shaping, painting. There is a market for the output of each stage. So each stage, whatever the output comes, there is a market for that. A newly appointed management accountant has been examining the company's operations and has prepared the following information below. So if you are if manufacturing stage, this selling prices have been given. Incremental variable cost has been given, right? Incremental variable cost is like if at all output is increasing, the cost is increasing. Okay. We haven't got any information about how much they are making and out. And what they're asking, given the above information, selling the output after which one of the stages will yield the greatest contribution margin. So we have to find out the contribution margin of every stage, right?
Okay. Yes.
So a total selling price of output in every stage is given. First, we will see the processing stage. So what is the formula for contribution margin?
Contribution by sales.
Contribution by
Sales
sales
minus.
into 100, but they have given what percentage or dollars. So we will see contribution margin. They have not given contribution margin ratio.
Yeah.
So contribution is equal to sales minus variable
Yes.
cost. Sales is 10, it is 8, and it is how much?
To see, to
$2. And no need even because they like yeah, yeah, $2, right?
oh, yes.
Yeah, so we will see the contributions, how they are. The highest contribution one would be the better one, according to me.
Yes.
Okay.
Okay.
Yeah, so next one, processing smoothing. Given the about selling the output after which one of the stages. So if at all we are taking smoothing. So smoothing is that means it is, I think this is the stages. First it will get processed, it will be smoothened.
Yeah. 4 stages. Yes.
Yeah, so 12 minus
Stage
9,
1.
right?
Oh, yes.
Is it right?
Yes. Incremental.
The
3.
cost will be, yeah, incremental cost. So 3. So this is better. So processing, I would cancel.
Yeah.
I'm okay with smoothing, but let's see the next one, shaping. 18 minus 14, $4. So I'm
Yes.
canceling smoothing.
Yes.
Shaping seems to be better than this two. Painting. Again $3. So painting also I don't want. So shaping is the best,
Yeah.
right?
Oh, yes.
Just go for this. Yeah.
Okay. Done.
A manufacturer of home furnishings produces an oak headboard. Manufacturer currently sells 4,000 headboards. Average price is 400 is $100 per unit.
Mm.
Okay, so they make oak headboard and they sell 4,000 headboards. Average
Average
price
price.
is
100
$100. To manufacture the headboards, the variable costs are, so this is the selling price.
per unit.
Yeah, and this is the variable cost per unit. Total fixed cost assigned to oak headboards is 150. Okay, that's always total would be given. Sale of headboards increases by 50% and all else remains constant, this would result in what? So they are saying if at all it increases by
50%.
50%. Okay, so
Okay.
that means if I take 6,000, it should go. Correct? Hello.
Yes, sir.
So 50% increase in earnings before, so they are saying 50% increment in EBIT. That is, they are saying
Yes.
contribution.
Okay.
So first we have to find out the EBIT. Uh, the headboard remains okay. Okay. Just a second. Just a second.
Okay.
Hello. Hello.
Yes, sir. Hello.
Hello. Yeah. So, like, what is the right answer and option we have to see? 50% increase in earnings before earnings and taxes. Do you think, like, if at all the sale of headboards increases by 50%? So
Okay.
we will find out the EBIT before and we'll find out the EBIT afterwards, and we can check. EBIT is nothing but contribution. What is that?
Contribution.
So what is the contribution? How will you find out the contribution? Sales minus variable
Sales minus
cost, right?
variable. Yes.
So what is your sales?
100.
Yeah, if sale of headboarding. Yeah, so 4,000 into 100 minus 4,000 into 55. Just tell
55.
me how much is that?
1,80,000.
Is it right? Yeah, this is the contribution, right?
Yes, yes,
If I go further, let's say if I want to take the profits, let's say contribution minus fixed cost is profit, right?
yes.
EBIT. Yeah. So
Mhm.
180 minus 30. Contribution is something from which fixed cost has to be removed.
Yeah,
Okay.
okay.
To get the earnings. So
Operating.
sales minus variable cost is contribution. If no fixed cost, then contribution is the contribution. Contribution is
Yes,
the profit.
operate. Yes,
See, are you understanding?
yes, sir. Yes, got it.
Sales minus variable cost is contribution. If there is no fixed cost, then this is the profit. If there is fixed cost, then we need to remove.
Yeah,
So fixed cost is 150. Sorry. What is your EBIT?
30,000.
30. Now let us do that EBIT with changes. What are they saying? Sale of headboards increases by 50%. So it becomes 6,000, right? Hello?
Okay.
Yeah, 50% increment means what? This into 1.50, it's 6,000.
Yes, 4,000. Oh, yes.
Tell me what is the contribution? Increased number of units, yeah.
2,70,000 minus fixed cost.
Yeah.
1,20,000.
So what is this? Do you think it is 50% increase? No, it is 4 times
Yes.
of this, right?
Yeah. Yeah. Right.
50% increase means it should be only 45,000. Correct or wrong?
Yes.
30,000, 50% is 15,000. If I add 15,000 to 30,000, it should be
Got.
45, but it is four
Yeah.
times
Right.
increase. So this is absolutely wrong option. Gross margin of 380. From where this gross margin of 380? So this is like I don't get any like reference of this amount. Gross margin is what? Gross profit by sales. So here I don't think that kind of data is there. Fixed cost of 225. So whatever the increment you are doing in sales, do you think the fixed cost is going to increase?
No, sir. It will remain same.
All else constant, but
Yes.
that's a common sense. And in earning before interest and tax 120, is it happening
Yes, sir.
after 50% increase in sales happening or not?
Yes, sir. Right.
So this can this be the answer? We have seen, right? 120 we have calculated.
Yeah. We got it. Yes.
Shall we move forward after you copy this?
Yes, sir.
Okay.
Done.
Next one. Company has a sale of one of its products of $400,000 per year and a contribution margin ratio of 20%. Margin of safety. What's the formula for margin of safety? This is the
Budgeted.
question we are doing. Just a
Yes, sir.
second.
Yes.
Yeah, okay. No, no, they're asking break even point, right? I'm sorry. What's the formula for break even point?
Fixed cost by contribution.
Fixed cost. What is fixed cost? So can we do this? They have given this. Okay, okay, okay. So contribution.
We'll do margin of safety. There we
Yeah.
get a break-even point.
See, margin of safety formula is budgeted sales minus break-even sales,
Okay.
right?
Yeah.
Margin of safety is 40,000. Budgeted sales is 400,000.
Mm.
Break-even sales. Bring this here. Bring this. Break-even sales is equal to
But
3 lakh 60, right?
we have to add.
I bring 40 here. Yeah.
Okay.
No, you have
Yes.
to bring this here and this will
Mm.
go there, right? It is already plus. It will become minus.
Okay. Right.
Next one. Shall we move forward? Yes. Next question. Just a second. Samir, please do this. Hello.
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 Yes, sir.
Yeah. 2 minutes. Actually, I lost the PDF. I'm opening that. Yeah. So company has sales of one of its products of 400,000 per year. This is the sales.
Sales.
Okay. And contribution margin ratio, margin of safety. They're asking fixed cost. Can you find out?
Yes,
Hello.
contribution margin ratio I
So
tried.
yeah, see, uh, margin of safety, budgeted sales minus break even sales. First, we will find out the break even sales. With that, we can find out the contribution, the fixed cost.
Okay.
Margin of safety is 40,000. Budgeted sales is
4 lakh.
400,000. Break even sales is 360, right?
Yes.
Now, break even point formula is break even point of sales is fixed cost by contribution.
Contribution.
Okay, contribution margin ratio also you can keep because it is break even point in sales, right?
Yes.
So what is the fixed, what is the break even sales? 360.
3,60,000.
Fixed cost by 20%, cross multiply.
72,000.
Yeah, 360.
Okay.
Understood?
Yes, sir. Got
Yeah.
it.
Finish this. I'll move forward.
Okay.
We'll do some 30, around 30 questions today
Okay.
because I want to enter into the next section now, next class.
Done.
Next.
Okay.
So first you have to find out the contribution margin. From that you have to deduct the fixed cost. You'll get the,
CBS. Okay.
that
Operating
means if
cost.
fixed cost is given, if fixed cost is given, then you need to do that.
Okay.
If no fixed cost, then contribution itself is
My
operating
operating
profit,
profit. Yes.
right?
Yes.
So 2000 units are sold and fixed cost is 60. Contribution margin per unit 60, but fixed cost they have given total amount. So what we will do? Company sells,
20,000.
makes and
2,000.
sells and incurs this much of fixed cost. Contribution margin is 60. Variable cost is this. Sales will increase by 10%. Okay. Sales quantities. So 2000 into 1.1, right? How much? Into sales.
2,200.
Yeah, 2200. Yeah, into 60 we'll do contribution margin. Then fixed cost will remove because it's always fixed.
2,000.
Tell me the total thing.
1,32,000.
Yeah,
Okay.
minus
Minus
60. Direct. Directly.
72,000.
Okay. Shall we move forward?
Yes, sir. Done.
Now, company's break-even point in sales dollars may be affected by equal percentage increase in both selling price and variable cost. So companies break-even point in sales dollars. Uh, may be affected by equal percentage increase in both selling price and variable cost. Equal percent changes in selling price and variable cost will cause the break-even point in sales dollars too. Okay. Break-even point in sales dollars may be affected by equal percent. So let's take selling price, variable cost.
Variable cost.
Break-even point in sales dollars. What is the formula for break-even point in sales dollars?
Fixed cost.
Fixed cost by contribution
Contribution.
into selling price. See, what happens is, if you are making 100 units, okay, and if you are making 200 units, so company's break-even point in sales dollars may be, okay, let's take fixed cost as 30. Okay, so it will be 30 in all the cases, whether increase or decrease.
Yeah.
Fixed cost by sales minus variable cost is contribution into 100. And they are saying that companies in sales will be affected by equal per increase selling price. So selling price will increase by 200 and this will become by 100. I'm
Yes.
increasing 100%.
Okay.
So what is the, tell me what is
60.
the like fixed cost by contribution? What, sorry?
60.
60.
Yeah.
And here again, contribution is how much? Fixed cost is
30.
selling price. This is the change selling price, okay?
Okay. Yes.
100% increased price. Equal increase. 60%
Sure.
only. Any
Yeah.
change?
No. Same.
Make a note of this.
Remain unchanged. Okay.
Next one will be the last question. Actually, I am running short of time.
Yeah.
I have other classes also. We'll try to see take in the morning if possible. No, tomorrow not. I can't take. Day after tomorrow we'll take.
Oh,
Tomorrow I have to go early. Shall we go for the next one?
yeah. Yes. Done.
Next question. Company sells its single product for $30 per unit. Contribution margin ratio is 45%. Fixed cost is 10,000 per month. Company has an effective income tax rate of 40%. Company sells 1,000 units in the current month. The company's variable expenses would be what? So SP selling price is $30.
Yeah.
Contribution margin ratio is 45%. Fixed cost
10,000.
$10,000. Income tax rate 40. They are selling 1,000 units. Variable expenses would be. So what is the variable expense? Sales minus variable cost is equal to contribution. What is the contribution? So 30 of 30, you should tell me the 65 55% of 30 is how much? Because sales minus variable cost is contribution. If sales is 100,
Mm,
okay,
okay.
contribution is 45, variable cost should be
55.
55.
Yes.
So we should take $30 is the selling price. Okay. Of that
Your contribution is
55%.
45, so we have to take 55. Okay.
Yeah.
60.5. 30 into,
16.5 into
yes,
number of units 1000. It is 16,000.
500.
Okay.
Okay. Yes, sir.
So Samrin, what do you say? Like you will try the rest of the questions or shall we do in the next class
I'll
till
try,
40?
sir.
Shall we
I'll
finish?
try. If I have any doubts, I'll text you.
Yeah. Do you think it's doable or till 40 shall I give the class?
No, sir. It's just substituting in formula. I'll try.
Okay. Then what we can target is in next class, we can go for target income calculations. Okay.
Okay.
Or else multi-product calculation also is there. We can target 50% of this. That means this
Yes.
weekend, whatever we are doing, we have to conclude this at any
Yeah.
cost.
Okay.
Okay, then we can plan for the next ones like this one is done, this one is done, this one we have, this one we did.
No, sir. Cost of capital videos also you didn't share.
Okay, so I have to share. Okay, this is the
No.
next target. Okay, I'll
Okay.
share this too. Yeah.
Okay.
Okay. Okay, Sam. Thank you.
Thank you.
Thank you.